Are they trying to turn us into a nation of renters? Let's break down the January Fed meeting, most notably comments from Chairman Powell about his state of the economy. He remains super optimistic that we have a very balanced and healthy economy. But I'd like to point out his impressive Michael Jackson-style moonwalk on his plans for the March Fed meeting, in which now he says it is highly unlikely the Fed will make a rate reduction by that meeting. And as we look at the chart on the CME Futures Fed predictions, before those comments, there was almost a 60% chance of a rate reduction. And immediately after, we fell over 20% to now only a 36% chance that rates are reduced by the March meeting. Speaking of a balanced economy, let's talk about layoffs.
Playoffs? Don't talk about it. Playoffs? You kidding me? Playoffs?
Some of the major Fortune 500 companies have already started 2024 significant layoffs. Look at this chart here, and as you can see, these are all notable companies that you're familiar with. UPS, Salesforce, Microsoft, PayPal, and even Google saying that they should brace for more layoffs going forward. Hat tip to MBS Highway with the data. We've all heard it, but how much of it is actually true? And that is, interest rates dramatically change during election years. Is this a myth or is this reality? Well, I wanted to find out, so let's dig into the data. Now, over the past 40 years, we can look and see that in elections where we went same party to same party, so Republican to Republican, going all the way back to 1972, we would see that the average rate the year before, the year of, and the year after, across the board, minimal difference. Let's look at when we go Democrat to Democrat. And again, same thing. Across all three, we see a pretty minimal difference in rates as they progress. Okay, but what if we swing one party to another? Let's say Republican to Democrat. Well, again, the year before, the year of, and the year after didn't see any progressive differences that would make you think, yes, there is a correlation between interest rates and presidential elections. So in my opinion, this is a long-standing myth. And if somehow you have it in your mind that you're going to wait in 2024 because of the presidential election results, I think you're waiting for no good reason. So the stories are everywhere and everybody has a different opinion. But another recent purchase of Blackstone over the company Tricon and their over 40,000 additional residential units that they own. This deal was inked for somewhere around $3.5 billion. And what we now know is there are multiple investment, hedge funds, private investment groups buying residential real estate. It's now estimated that 1 in 4 purchases happening now are purchased by entities, not individuals. So my question is, with so little inventory out there and a thirst for American people to own real estate, should we allow entities to continue to purchase homes, raise the rent? And what's their ultimate goal here? Are they trying to turn us into a nation of renters? I think the best thing would be let individuals own individual real estate, because that has always been the number one wealth building tool. Tell me your thoughts.